To me, you'll never be perfect at trading. It's sort of like golf. You can only strive to get better at it, but you'll never ever play a perfect round of golf. You'll never ever be a perfect golfer.
Hello and welcome back to another episode of Two Blokes Trading. Today we're joined by Tom Basso, a guy who bought his first mutual fund at 12 with his paper route money and went on to manage millions as a CEO of Trendstat Capital. Dubbed Mr. Serenity in the new market wizards, Tom's known for his calm approach to markets, his razor-sharp trend-following systems, and his no BS take on trading psychology. He's traded everything from corn futures to currencies, authored panic-proof investing, and even served on the board of the National Futures Association. These days, he's focused on helping traders master the mental game, because in his words, psychology trumps everything else.
I like to do landscaping. I love to cook. I make wine. I like to work out. And I trade. I try to just add value wherever I go. I don't sit here all day long wasting my time and stressing myself out. And once you figure that out, life is pretty good at that point. You got to have a plan for your mental state.
It doesn't really matter so much if you have a good day or a bad day. Like if you've got a systematic approach, you know your system will weigh out in the end. I don't know what's happening tomorrow or the next day or the next week. What I've done is I've shifted my own personal trading towards the shorter time where I have more control over, what's happening in the market at that time.
I would never try to do that. It's not Mr. Serenity. It's just gambling on a couple issues. Good luck with that. You're just sort of the monkey executing the strategy. There's nothing to get excited about. I got to do 999 more of these. You just got to keep doing a lot of them and get bored by it. Your mental state becomes sort of balanced, and then you can be Mr. Serenity.
So if you want to learn from a true market veteran who's seen it all and kept his cool, you're in for a real treat.
Tom, thanks so much for joining us today. It's a real pleasure to have you on our podcast today. Thank you so much for joining us.
Oh, we're having fun. Can't wait.
Yeah. So you're up in your mountain home doing the podcast today, huh?
I am. And
Nice.
that's my little alarm going off. That's you'll hear that every now and again. Every 5 minutes, I remind myself to take a glance.
Really? What does that do then?
Oh, I'm in the middle of a trade that so far is not going my way, but we'll see.
Okay, good. That's interesting. What are you trading at the moment?
This particular one's an NQ futures, and it's to the upside. I use a 5-minute chart. I use a break of the previous 5-minute bar. And then every 5 minutes, the alarm goes off so I can update moving up my stops or taking profits on 2/3 of the position. It's how I do my day trading if I'm obligated to sit here. Sometimes in certain days, I'm here for, in the morning, probably 10, 15 minutes. And in the afternoon, I get my whole work done in about 20 to 25 minutes. And then the rest of the day,
really?
I'm out doing landscaping or running to the grocery store, cooking dinner, doing all sorts of other stuff in retirement that I enjoy doing.
Okay, nice. So you got a very short spell of trading and that's it for the day. You can just switch off.
On a good day. Some days I'm here, like yesterday, the computer came in. So I was here sitting here for probably about close to 10 hours. So I day traded on one machine while I was getting the other machine brand new out of the box, loaded up with all the different software I need. I'm moving from Windows 10 to Windows 11. So I have a lot of work involved in that. I've been doing this 3 days. I've just got my wife's computer ready to go, and now I'm doing mine. And I just finished pretty much most of what the critical stuff about 20 minutes before I came on this.
Yeah, very good. And 50 years in the markets now, and you're still as active as ever and loving the markets. How do you do that? How does that work?
It's the same way that you see some people who really love crossword puzzles or something. They get better and better at it, and they love the tease of the new puzzle that they've never done before and the new word that they haven't seen before. To me, you'll never be perfect at trading. It's sort of like golf. You can only strive to get better at it, but you'll never, ever play a perfect round of golf. You'll never, ever be a perfect golfer. You can only try to just incrementally get better and better. And that goes for whatever age you're at. So at my age, coming up on 73, I, I'm in golf. I'm definitely not hitting it as far as I used to, but I'm hitting it more accurately than I used to, interestingly enough. So I haven't suffered too awfully much. Every now and again, an injury or something, but for the most part, I can keep doing what I was doing. And I think that trading's the same way. You really, I try to keep my skills up on computers. I was a programmer. I mean, I was an engineer by degree, and in college learned Fortran and BASIC, and then I learned Fox Pro language, which Microsoft bowed out and then discontinued. Did some Visual Basic, and now I'm sort of into Python, and I'm working consulting with a guy that's building a platform up in Michigan that's writing it all in C sharp. So I've been on the fringe of a lot of programming over my lifetime. I am not a programmer, or at least I would not consider myself one. But with the help of AI and the ability to ask a Grok or a Chat GPT or a Co-Pilot, say, I want to do this thing on my computer and I want to do it in C sharp language. Could you take a shot at writing the code that would do that? And they will take a shot at that, and they'll
Yeah,
give
yeah.
you back a bunch of code. And likelihood that it runs probably the first time is probably slim to none. But then you can take the results from that, feed it back to the AI, and the AI says, "Oh, I can analyze that error, and yeah, this little area here was incorrectly put together. We need to modify that to do this." And you copy and paste it, and you try it again, and you just keep repeating that process. Before long, you have a program that's working. So you don't need to be a genius programmer. You need to know a little bit, and that's about where I am. So it I think it changes the world quite a bit, because back in the day, I mean, if you go way back 50 years, I'm with a calculator and a piece of paper. That was my simulation platform. And
Really.
it's hard for people to imagine, but I would spend maybe a couple weekends in a row doing nothing but one study, all by hand on sheets of paper and graph paper and Wall Street journals. My hands would be covered with print ink, and I'd have to wash them not touch anything in the apartment back then. And nowadays, you want to do a study, you kind of describe the study in great detail, or you write it up in a text file, feed it to some AI engine, and say, I'd like the code to be able to use these databases, and why don't you write it in Python, and why don't you do this? And you make some suggestions, and the AI just comes back and tries to comply with your wish. And it
It's
leverages your time to the point where what might take me, weeks or months to try to program it myself might take a day now or
it's
less. You
incredible.
might get lucky and it might be 4 hours. It's hard
It's
to
it,
believe. All of a
it is
sudden,
hard
you're
to believe.
running some 25-year study in 17 seconds.
Yeah.
It's
I mean,
bizarre.
like we've had lots of traders on the podcast and guys going back to the chalkboard days, and it's all about how you continue to evolve with technology. And we'll touch upon your automations and things later in the podcast. But it's incredible what you can do, and we're kind of utilizing AI a lot at the moment as well. I mean, even with like business, we're looking
Yeah,
AI agents to automate business flows, and it's just incredible. And like I said, if you keep on top of that stuff, it's we're seeing a changing landscape, and it's just if you don't stay ahead of it, then you're going to get left behind very quickly. So,
very
you know,
quickly.
good for you for staying on top of that for sure. And tell
Well,
me,
I
I've had to
try.
ask.
I also don't consider myself an AI expert either, but at least I'm, familiar with some of the things it can do. So that gets me ahead of the average population.
So I want to ask. I believe you had a nickname of the Mr. Serenity. Now,
Yeah.
I'd love to know why that name is. I can kind of tell by the start of this interview already because you seem like a very chill guy. That name is obviously it's an interesting because of the game that you've been in for so long. Tell me how you got that name.
Yeah, Jack Schwager interviewed me for New Market Wizards, and Jack is sort of a, at least back then, I don't know what he is today, but he was more of a, I would call it a caffeinated New Yorker, if you know what I mean. Everything was very quick and sort of nervous, edgy. A lot of the people he interviewed were very high ROI traders. You know, these guys are making thousands of percent or hundreds of percent. Some of them don't exist today because they blew up or they have died or retired from the industry. They no longer even trade. Uh, I think when Jack interviewed me, he saw something completely out of the ordinary. And he had a lot of people saying, you should interview Tom. He's got some interesting things to say. And he said, yeah, but I've looked at his numbers and it's not that impressive. Yeah, but he's got some interesting things to say. He finally bit and interviewed me. And when he got done with it, he said, man, this was a very interesting interview. I regret that I didn't jump on this earlier. And when he sent me the actual copy, because he takes the recording and then they transcribe it and get it all written up, and they allow the person he's interviewing to correct, change a statement, veto it. He's had several people that he interviewed just say, "I don't want this published. I've changed my mind. I don't even want to have this out there." And so he sends it to me. It came in FedEx before lunch. I read it during lunch while I was eating. And I called him up after lunch and I said, Jack, I just read through it, just got here this morning. I read through it. Do you have a copy? I can tell you one comment I've got. Sure. And I hear the shuffle of papers. I said, turn to page 8. Turns to page 8. I said, down in the third paragraph, you misspelled the word whatever. I can't remember what the word was. I said, okay, what next? I said, that's it. Big pause. That's it? You're not going to change anything else? I said, no, you captured it pretty well. And he said, another pregnant pause. He says, are you okay with me nicknaming you Mr. Serenity? Because that's what I see you. You have this lifestyle going on. You're so calm with your trading. Everything's methodical. You have half of it computerized. What are you okay with that? And I said, Jack, it's your book. You can call me whatever you'd like. And he said, Tom, out of all the interviews I've done, this was one of the kind of strangest but most enjoyable ones that I've ever done. And it was
Awesome.
so easy to write it up. It was like everything you said was just so normal and logical and calm. And that's why I called you Mr. Serenity, because all these other guys are basket cases and stressed out and chain smoking and alcoholic and on drugs. And you just have, if I could aspire to be any one trader, it would be you, because you have a nice lifestyle. You have managed your life around trading instead of making trading your entire life.
Sure.
And so that's how it all evolved. And
And
to
that's why
this
you're still
day,
doing it to today, huh? And that's why the
yeah,
longevity is still there, I guess, to
yeah,
still be in the game, which is
yeah.
testament to you. And do you think that the psychology part of that and how you approach things in the markets differs you from other traders out there in a way that gives you maybe an edge?
Yeah, I think that when I see a lot of what I would call rookie traders or newbies, that on places like X.com, where I get a lot of direct messages and questions about what I should do, how do you do this, and how do you position size, and all these different questions. I sense, just looking at some of the posts, that some of these guys are literally there an hour before the market opens, and they're there an hour after the market closes, and they never leave except to go to the bathroom maybe, and they're glued to the screen, and they're addicted to it completely. It's sort of like a gambler would be addicted to pulling the slot one more time or to play one more hand of blackjack. and their family life suffers. Their family never sees them. They never want to go on vacations. They get burnt out. They're just letting it consume them. And I think they consider, if you ask them, well, who are you, or what do you do? They would say, I'm a trader. If you ask me that same question, I would say, well, I'm a husband, grandfather. I like to do landscaping. I love to cook. I make wine. I like to work out. Oh, yeah, and I trade. It's like one of many, many things that I do. And I just fit it into the schedule every day around 1 o'clock when the markets close. I update the data. I update some of my routines. I move stops if they need to be moved, and I'm done. And everything's ready for the next 24 hours. So, do I really need to be watching the screen? I've got good till cancel stops in there. They're going to get hit or they aren't going to get hit. I'm going to have a good
Mhm.
day or a bad day. I don't have any control over any of that. I've already got my risk managed. I got my position sized properly. Everything is the way I want it. So, why waste time sitting here looking at little bar charts going up and down and green and red? It
That's
doesn't
awesome.
add any
And
value. So, I try to just add value wherever I go. If I can spend a little more time in the kitchen and we have a better dinner tonight, then wouldn't that be more value added than me sitting here wasting time looking at a bunch of bar charts?
so what you're telling me is I should be playing more golf and trading less. Is that what you're saying?
Well, I think what it comes down to, I mean, sometimes like when I'm doing this type of stuff, I'll get stuck here now. If I stay in this trade forever for the rest of the day, I'll be unwinding it near the close. So I'm kind of obligated to deal with this one trade. And I decided to do that because not only do I have this interview, I have another Zoom call after this. So I'm going to be sitting here till about 12:30 my time, and then I'll have lunch and I'll shut everything down for the day about 1:30. I'll be all
So
done
side
and
interest.
take the rest of the afternoon off. Holiday
That's awesome.
weekend here. We revolted from Britain a
Really?
few years back. Um,
Yeah.
the I think what a lot of traders do is they spend so much time doing one thing and they don't step back. They aren't aware of what's going through their head and what's going through their emotional state. They're getting greedy, they're getting depressed, they get angry, they all these different things. Markets can do that to you really easily. And I think I've got a good grasp from my probably my 20s of how Tom is processing information and how I can step back and kind of watch Tom do trading. So it's kind of a weird, it's sort of like having two parts of your brain. One part says, let's go do this trade or let's move this stop up or whatever we have to do. The other one is saying, uh, how can we do this better? Or why are you so stressed out over this? Or I don't know. Why are you thinking about taking a profit on this trade? It's running in your direction. You're moving the stops up. That's your
Yeah.
strategy. Don't take profit on
Stick
it.
with it.
Let it keep running.
Yeah.
And
Yeah.
you catch yourself doing things that are impulsive, and that gets you into all sorts of trouble usually. And you start realizing it over time if you journal it carefully. You quickly realize that you're not adding value. You're just getting in the way
In the way.
almost.
Yeah. Yeah. Yeah.
And then you
Yeah.
start
Yeah.
saying,
Yeah.
why am I wasting my time doing this?
Yeah.
Can't I do this more efficiently so I don't
Yeah.
sit here all day long wasting my time and stressing
It's a
myself
great
out?
approach.
And once you figure that out, life is pretty good at that point. You can be a trader. You can be free to take a laptop with you and, take. I was trying to trade from the Indian Ocean on a cruise in January from my laptop with a Starlink connection because I only have to do, 20 minutes a day, 25 minutes, something like that. And the rest of the day, I can enjoy the cruise. So
That's awesome.
I think that's what people need to do a little more of is to not label themselves as a trader, but to work on understanding themselves, the emotional state, the mental state. What is a positive mental state? Do you want to be balanced? I mean, people ask me, do you think the stock market's going up? I have a clue. Tomorrow it could be down. Tomorrow it could be up. I'm ready for both. I have a plan for both.
Yeah.
I don't waste a second worrying about whether the stock market's going to be up or down
Yeah.
because I don't have any control over it. It's going to do whatever it wants to do. My
Yeah.
job is to react. So I got
Yeah.
the stops ready to go. If it turns, right now I'm positioned long in this trade. If it keeps going, great. If it doesn't, I'll get out. You know,
So it's an awesome way to look at things, and I think if more traders had that objective approach and to trading, they would do so much better because, like you say, they get themselves in the way. They let their psychology get in the way. I mean, I know you say like a huge part of trading is psychology, more important than entries or even risk management. So now I can kind of understand why that you say that and mean that because it's something that was when I read through your bio and so on, it was interesting for me to understand what that meant and how you meant by that because everybody has a different approach. But it's a really interesting approach that you have for sure. I mean,
you
just
could
the fact
have
that you
you
could
could
say
have
mentally detached.
You could have, and people have asked me this. He said, "Well, of course, you got it easier. You automate a lot of things, so you don't have the problems we real traders have. Sitting there in front of the screen and doing this all by hand." And to that, I say, if I didn't have my head screwed on straight, I could just say, why am I sticking around to 1 o'clock this afternoon and running my stuff? I would rather just screw off and go, I don't know, go shopping, go do something, go work out.
Something
I'll just
productive.
skip it. My orders from yesterday are probably okay. I got a couple filled, but it's okay. I could easily, as a human being, step in and not run my stuff, not do my stuff. 50 years, I've been doing it every day. I never, in the worst cases, I might be a little late. Instead of 1 o'clock, it might be 2 or 3 or 4. Or if I have computer problems or data problems, it could be in the night sometime I have to deal with it. Or we lost electricity here in the mountains one time about 3, 4 years ago. I was sitting here and we turned on the television for the morning news. Nothing. I thought, okay, well, we got electricity, but we don't have internet. And what happened? So we start doing some checking and we figure out that a backhoe, a tractor, was digging a trench on a main fiber optic cable in from Camp Verde nearby or out to the west of us, sliced that thing. They had to piece together literally hundreds and hundreds of connections to get it done, and it was going to take all day. They hoped to have it done by 9 o'clock at night. So I went to my backup plan. I said, okay, well, then 1 o'clock, we'll check again. They still said 9 o'clock, we're on schedule. I happened to remember that Safeway, a grocery store nearby, has to have their own dedicated internet to run the cash registers and the inventory control systems. And they have a little cafe there where they sell you a coffee and you can sit there and have a little table and there's Wi-Fi. And it's off of their system, not the one that controls the rest of the town here. So my backup was just take my laptop there and run my stuff if I had to. Well, 9 o'clock, they're getting ready to close, so that's not a great alternative. My backup to that was I'm an hour and a half away from my other house in Scottsdale. So I just pack up everything, drive for an hour and a half, run my stuff there, sleep overnight, come back up here in the morning. It turns out it was repaired at 9 o'clock. I did my orders at 9 o'clock. Everything was fine.
Awesome.
So you got to have not only the A plan, you got to have the B plan, you got to have the C plan, you got to have a plan for your mental state. And if you're depressed, how do you make yourself not depressed? If you're giddy and being greedy and getting too excited, how do you back off of that and get back to balanced? And once you start figuring out how to do that, then every day is sort of the same, and it's a pretty easy life actually.
That's the thing, and it doesn't really matter so much if you have a good day or a bad day. Like if you've got a systematic approach, you know your system will weigh out in the end. It doesn't matter if it's a week or a month. It's about keeping that edge, understanding that, sticking with the process. And tell me, with your trading, you're a kind of a trend following trader. Is that right? Are you kind of very much trend based?
Yeah, I would say it's trend following mostly, but I would also say that if you take it, I mix time periods. So I have longer term trend following models that would be much more traditional trend following that most people would call trend following. You get in on a trend, you ride it as long as you can. Then I've got short term strategies that are what I would almost call counter trend, but they are triggered by trend following indicators. So you could argue that they're sort of overbought, oversold indicators triggering a trend in the opposite direction. And that typically is against what the long term trend is doing. And therefore, I get a lot of diversification effect when I do that. And it smooths out my track record. It reduces the drawdowns of a traditional long term trend following model by having sometimes a long here in the long term model. And then on the short term model, I'm the opposite way, and the two are fighting each other. And they may even in the portfolio sometimes take me to zero, even though both are doing a trend and both are in on that trend. One's very short term, one's long term. They're offsetting it. So my portfolio is showing a zero position. From the broker's viewpoint, I have no margin requirement. I have no position. They don't know the difference. I know that I've got a long and a short, and when I put them together, it goes to zero. But I think what that does for me is tries to improve my return to risk ratios, which is everything to me. I don't chase returns. I'm retired. I've been retired 21 years now. Uh, I enjoy retirement. I don't want to go back and be a money manager again. That was a tough life. And I dealt with it pretty well, I thought, all things considered. But after about 28 years, that was enough. And I'm
Yeah.
enjoying retirement. And
And
so I try to be steady. I would love it if every day I just saw green on the screen somehow, the big
yeah.
number at the top.
Yeah.
Um, I never see all green on any one of my, I think I've got a total of across all strategies, two accounts. I don't know how many bunch of strategies. I think I've got somewhere close to 70 positions now or something like that in
Wow.
different markets.
And like, if you found it difficult this year, it's been difficult for trend followers, obviously, with the way
Yep.
the markets have been.
Well,
How have you
I'm on a
adapted?
drawdown right now. Yeah.
That's what I mean. It's hard to adapt, right? And what do you think the best way or approach is for that as a trend trader?
Uh, I I try to look at my indicators that trigger my trades and infuse in them into the math or into the logic some amount of uh, volatility. So let's give you an example. Let's say you got some volatility going on in a market and it's increasing. Well, if this would be the amount of noise that you see in a normal day, but volatility is increasing, you're going to see more like this noise, and it keeps going more, and now you got more and more. So the herky jerky everyday normal movement of the market, with just buyers and sellers fighting it out all day long, it's going to either increase or it's going to decrease. Volatility gets greater, gets less. So all my indicators have that kind of volatility input. So in the case of Bollinger Bands, for instance, they use standard deviation to set those limits. In the case of Keltner's, they use ATR, or average
Mhm.
true range, another
Yep.
measurement of volatility to set that. Donchian channels use a look back period and they take the highest high and the lowest low. So again, if it's tight volatility, the Donchians are going to be close. If it's high volatility, you're going to see it farther away. So I use those three indicators are probably my most used indicators. And I have different time periods on them. I run some of them at 3 day, 9 day, 21 day, 50 day in one case. And I think that what that gives me is an automatic adjustment so that when things get crazy like they've been, it hurts. I've had a drawdown like a lot of trend followers, but it hurts a little less because I'm adjusting things for this increased volatility and therefore giving it more room for this craziness. So I'm just sort of sitting in a position and I'm not really trading in and out all the time. And that helps reduce the drawdown.
So, do you kind of reduce risk in high volatility and increase risk in low volatility?
The position sizing changes automatically. So high volatility, lower position size, low volatility, high position size.
Oh,
Direct
nice.
proportion to the volatility
Cool.
and direct
Interesting.
proportion to the amount of risk on the trade to the stop loss point. So I have algorithms all set up. I wrote a book on the subject called Successful Traders Size Their Positions, Why and How. And I put the exact math I use in the book. It's what you learned in maybe sixth grade or seventh grade. No fancy calculus or differential equations or anything like that. And very easy to put it into a spreadsheet or even do it on a calculator if you have to. And what that does is when markets are quiet and nobody cares about that market, you're loading up on you more shares if you're trading stocks, more futures contracts if you're trading futures, or bigger FX position, whatever. And then it breaks out and some of the trend followers jump on board, and some of the fundamentalists are starting to figure out that this market has a reason for going up, and more people are writing about it, and the volatility is getting bigger and all that. And I'm saying, okay, now we got bigger volatility, we have more risk in the trade, we got to back off that position size, and we got to stay with it. Trend follower, lets the profits run and cuts the loss short, but if you started out with, say, 10 contracts or 100 shares, maybe you should only have 90 shares now. Maybe you should only have 85. Maybe you should sell it down to 67 eventually as things get insane. You look at things like Nvidia that happened over this earlier part of this year, last year. That's been a stock that's just gone nuts with the artificial intelligence circuit boards and all that. And it's almost got to the point where it was insane with its volatility. So trying to deal with how much risk that position would have in your portfolio. Let's say when you bought Nvidia way back when, it was just one of 10 things in your portfolio, but then it's gone crazy. Well, now you look at your portfolio and you've got Nvidia and 9 other things that don't
Sure.
matter almost. Your profits
Mhm.
and losses every day are going to be driven by Nvidia. Well, why not bring everything back into balance? Take some from Nvidia, spread it amongst your other good candidates, and you end up with then truly having a portfolio, I believe. I think that's what you need to do. And it makes your life so much tamer. It's not as exciting. I mean, the guys who own 3 stocks in their portfolio, and one of them is Nvidia, and are shooting for 300% return in the year. Hey, go for it. That's not me. I would never try to do that. It's not Mr. Serenity. It's not running a logical portfolio. It's just gambling on a couple issues, and good luck with that.
And tell me, have you seen with the rise of algos a change in how trend following performs?
Uh, Not really. I mean, COVID was a huge trend following winning year. Um, Actually, last year was decent. Year before was good. Uh, it wasn't as good as 2020 was. 2020 was the best year of my life in trend following. The COVID crash was a huge trend down, and then it turned around and huge trend up.
Yep.
If you catch both of
There's a lot.
those, you end up with a very nice return for the year, even if you're trading boring like me. Um,
Yeah, yeah.
a lot of people didn't. A lot of people saw the crash and said the world's coming to an end. We're going to shut everything down. I know professional CTAs that they're getting paid to manage other people's monies. Same thing I was back in the day. They just shut everything down. They literally
I
stopped
mean,
trading. I don't know how
it,
they could
it,
justify
it's
that, but they
it's the
did.
best time to trade. I mean, like that's the craziest part of it, right? Markets are moving in one way. That's interesting to hear that. And you talk about systematic trading as well. I want to touch upon this for our listeners. How do people go about automating their systems and processes?
It's um, it's going to vary greatly with different levels of knowledge. You can go all the way from the mathematician, computer jock from college, or he's literally a computer scientist in the real world, and they want to automate it. It's child's play for them. You get a database, you fill it up with price data, and you write a program to go against the price data, pull it, calculate a moving average or whatever it is that you want to do, a Keltner band. Investopedia.com has all the formulas for you. Just go get one, put it into the code, have it print out the results. Not that hard. Then you got people a little bit more, I would say, like myself, or even a little lesser knowledge of computers than me, that know something about computers. They've upgraded to Windows 11, like I'm doing now already, and they've gotten their list of software and apps that run what they do. And they may do some of it manually, and they may have a few calculations done automatically. They might take the formulas in my position sizing book and put it into a spreadsheet so that when they're about ready to do a trade, they say, okay, well, here I'm going to buy at 20. My stop is going to be at 17. I've got $3 a share risk. I'm going to pump that into my spreadsheet. It's going to tell me how many shares I should do based on my equity. And so that, they've got a spreadsheet, so it's a little automated. They plug in one number, the answer comes out. It's not that difficult. It's not programming. It's just a spreadsheet. But that might help speed them up. So that's a form of automation too, because otherwise you're sitting there on a calculator, doing it. You could hit the wrong key. You could come up with the wrong answer, screw it up, make a mistake. So then you go all the way to the guy who has no knowledge of computers, may not even own a computer. There are people that operate their entire world off the phone. They don't even own a desktop. Mm-hmm. For those folks, it's going to be a different answer. They're going to end up having to find packages out there that they can deal with from their phone and get some automation into their strategy. And they may have to compromise and live with that platform's list of possible buy-sell engines, position sizing algorithms, what markets some platforms only trade stocks, some platforms could trade futures, some could trade both. So you're going to have to live with things. You're going to have to do a lot of evaluating of platforms and figuring out which one would work for what you want to do. So there's different levels. And I think that's what level you're at and what markets you want to trade. And I think what your objective is on how much time you want to spend trading and all that is going to lead you to very different answers, all the way from trying to get a platform that's cookbook to maybe customizing certain parts of your process to maybe going all the way and either hiring a programmer, or maybe you've got a son that's gone to college or a daughter that's gone to college and they learned programming in college and they want to join daddy's business, and maybe you can get them to work on some Python code or some C# code for you and see if you can automate some things. There's just different answers I've heard out there all across the gamut of the world. So I think the answer is different for each person, and they just have to start from evaluating where they are and what are they going to try to do, and then how do you get from point A to point B, and are you willing to pay the price either in time spent, money spent with maybe a programmer, or hiring somebody to do some of the work, or paying for a platform that will do what you want it to do, and then get there. Fight your way through it and then get there. And then once you get there, you look back and say, wow, look at me. Life's good.
And tell me, like, with that, obviously, like semi-automated trading, and then maybe even pushing it towards fully automated with algos or whatever the case may be. But how much bias comes into play with your own systematic approach?
Bias, I'll answer it this way. My observation over my lifetime of all human activity falls into one of two different groups. There's a lot of human activity, like brushing your teeth before you go to bed or something, that is completely routine, does not require a lot of thinking. You almost don't even know that you did it. It's so routine. You've done it, like in my case, 72 years or whatever. That is a repetitive, non-creative effort. The other activity that human beings are sort of uniquely, not quite, I've heard apes and some things can do some of this, but the creative, the ability for you to create a new trading strategy, to paint a beautiful piece of art, to compose some beautiful music. That is the other form of human activity, and human beings love doing that. That's fun. So if you look at trading and break that into those two pieces, which one would be the creative and which one should and could have your biases built into it? It would be the creation of a new strategy. Looking at the markets and saying, based on what I see and my own objectives, I want a math or a logic in my trading that sort of does the following things, and I want my position sizing to be about at this level. I don't want to trade higher than that. I don't want to trade lower than that. It'd be too boring. Too high is too stressful. I'm going to be right around in here. That is the creative part of the trading process, and certainly I put my biases in there. And certainly I've tried to be as creative as I can be. Now you build that out and you test it. And that gets to be a little bit of creative because you've got to go find errors in your coding or errors in the platform or errors in your data. And you have to like second guess yourself and figure out what you did wrong. But once you get it that blessed and you say, okay, I've done everything I can possibly do. The work of art is finished. I'm going to hang it on the wall now. Well, in trading, that means I'm going to turn it on. I'm going to start every day. It's going to be added to my afternoon process. Data is going to come in. Algorithms are going to be run. Orders are going to be generated. They're going to be shipped. That is falling into the repetitive. You don't need to think. Just do it every day. Turn the brain off. Get it done as fast as possible. It's no fun. It's frankly, if you can automate it fully, it's a waste of your time.
Yeah. I guess
So
the only
that's
problem,
the way I look at it.
sure, I think that just with the volatility at the moment, just how the reactive the markets are, with news announcements and information coming out the way it is, geopolitical issues, the market is just really, it's really tough to trade. And what I found is I've actually gone back to kind of shorter time frames around my trading at the moment, just because it's like, I don't know what's happening tomorrow or the next day or the next week, So personally, what I've done is I've shifted my own personal trading towards the shorter time where I have more control over, what's happening in the market at that time. Have you changed your style at all in your approach?
Well, I've added over time. It wasn't anything recent, but I would say probably about 3-4 years ago, I moved to time period diversification a little bit more. A guy named Lawrence Bensdorp, who you may have heard of, he's written several books on multiple strategy trading. And they're really excellent books, and they really affected my thinking on how easy it is to diversify by time periods, by markets, by indicators. And I've tried to work on doing more of that in the last, say, 5 years. And one of them is a time period diversification. There's one strategy that's in my pension account, IRA, that goes down to 3-day time periods. So that's pretty short for me. I've spent my life in the 20-day periods, looking at a month or something. So being at 3-day is a lot of transactions, but I've got it all automated. So, the work is kind of done for me. I don't have to really stress over it too much. Getting it started was a little more work than normal because of the amount of volume of orders, volume of fills, making sure everything's doing what I'm supposed to, I designed it to do. But once I've become comfortable with that, it's pretty easy.
Awesome. And a final thought, what do you think is the most underrated mental habit for building long-term wealth as a trader?
Well, I've said this a lot to people. I've got several different things that people quote me on, but to think of this next trade as the one data point in your next 1,000 trades. And the reason I say it that way is when you think of, say you have a strategy and it has a positive expectancy, it's over time, it should make money if you don't screw it up. All right. And you know that it has that positive expectancy, or at least you're confident it does, you're ready to trade it. How many trades do you need to do to then have a statistical sample size to look back and say, yes, I really did make money over this X amount of trades. And the reason I pick 1,000 is it just sounds like a lot of trades. And for the person who's starting out and gets bent out of shape all over the place over, oh my God, I'm going to have a corn contract now, and their hands are shaking, and they might make $50 or lose $50, and it's real money, and oh my God, I'm trying to learn how to become a trader. My emotions are going all over the place with every tick. If you start thinking of that as this is just my trade, I'm doing exactly what I designed my trading strategy to do, and this is just one data point, and I'm going to get into this trade, I'm going to get out of this trade. It's either going to be a profit or a loss. It's going to get logged in, and I got to do 999 more of these things. Doesn't that put a different spin in your brain? You just say,
Yeah,
I'm just grinding here. There's nothing to get excited about. I got to do 999 more of these. And so I think that's one thing that to me is a nice mental attitude to take towards trading, is just that you're just the sort of the monkey executing the strategy. And it's just one of 1,000 things. And you just got to keep doing a lot of them and
that's
get
it.
bored by it, because it is
And
boring.
and you'll
And
probably
if
learn
you can
more
do
from your
that, your
losses.
mental state becomes sort of balanced. And then you can be Mr. Serenity.
Yeah, I need to take some more of that advice. Tom, it's been an absolute pleasure having you on our podcast today. It really has been enlightening for myself, and I'm sure all of our listeners. And look, all of your links and everything will be in our socials and YouTube and so on. So make sure to check out Tom Basso. Thank you so much, Tom. It's been a real pleasure.
My pleasure, Jonathan. We can do it again.
100%. We could talk all day.